Hi, my name is Rahul Pal. I'll be talking a bit about the events in May, the rate movements in the market, the outlook, and our scheme strategy. Well, the government of India actually announced the much awaited fiscal stimulus package. The markets were initially apprehensive of it to be a large fiscal stimulus, but the final details were close to 1.5% of the GDP as a fiscal stimulus. The RBI followed suit. The Monetary Policy Committee of the Reserve Bank of India advanced its meeting from June to May, cut the repo rates and the reverse repo rates by 40 basis points. The repo rates are now at 4%, and thus it seemed the fact that it was a move in tandem in terms of both RBI and the Government of India synchronizing their moves. Now, a bit about the markets. It was generally a very stable market. In fact, to an extent, it was a good market for the corporate bond market. But initially, there was a bit of a worry because there was also an additional government borrowing which was announced to the extent of close to 4.2 lakh crores. So the total government borrowing, the gross government borrowing stood at 12 lakh crores. The initial market sold off on the news, but then a hope trade was always there on the anvil with the idea that the Reserve Bank of India will intervene and monetize the fiscal deficit. While it hasn't been so till now, yet the market carries a large hope trade. The 10-year sovereign just moved down by 10 basis points through the month of May. There was a new issuance of a Government of India bond of a 10-year by somewhere 20 basis lower than the current market. The real movement was actually in the AAA credits. Corporate bonds, the 5-year corporate bonds fell by 50 basis points. That was a large movement, and a significant movement in the shorter end of the curve. The money market rates fell by close to 100 basis points. So generally speaking, a good month for the debt market. I move to a bit of an outlook on the debt markets. We believe the fact that the GSEC rests largely on a hope trade, wherein there is a hope that RBI would intervene in the markets through a monetization of the fiscal deficit. So there may be a bit of a short-term rally in GSEC, but over a long period of time, maybe a 1-year period, we're not so confident of the GSEC market, predominantly because of, when the credit offtake sets off in the second part of the year, and given the uncertainty on the scale of borrowing, this all would add up a bit of worrisome for the gilt markets. So we'll be cautious going into gilts at this moment. The credit markets, typically the AAA credits, we think they're well poised, the spreads are attractive, the flows in the mutual fund have stabilized, and that's something very important for the corporate bond market also. And we also see a bit of an action from the banking system through the TLTRO. So our bias would remain towards AAA PSU. In the financial services space, we'll be careful after the impact of the COVID provisioning across balance sheets. So we'll be taking a very careful look at all NBFCs, and our bias would be towards a stronger parentage. We'll also be very careful about a commodity-induced inflation, something that may affect the debt markets. I move on to the scheme strategies. Mahindra Low Duration Bachat Yojana. The average maturity of the scheme stays close to 350 days. Because of the sharp drop in money market rates, the portfolio YTM has moved down to 5.90. We'll continue maintaining this average maturity, maybe a bit lower as we go ahead. Mahindra Ultra Short Term Yojana. The average maturity of the scheme is close to 180 days, on the higher side of the permissible maturity, and the YTM of the portfolio is 5.50. We intend to be in and around this maturity as liquidity is abundant and should keep the money market rates quite stable. Mahindra Credit Risk Yojana. There was no significant spread compression in the lower credits. We sold a part of our assets. We have stayed largely in cash, a large cash proportion in the portfolio, and the YTM of the portfolio is close to 9% with the modified duration of close to 1.6. We intend to redeploy back the cash as we feel comfortable with the certainties around the credit markets. Mahindra Dhan Sanchay Yojana, we continue maintaining a MOD of close to 4, and we also maintain a similar MOD of in Mahindra Equity Hybrid Nivesh Yojana. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.